the Case-Shiller Index. Robert Shiller, professor of economics at Yale University. Good to see you again, Professor.
Good morning.
So why, clearly this number beat expectations, so it wasn't terrible, but why are we seeing this continued streak of moderated price gains and sluggishness in home prices right now?
Well, what we're seeing is they're still going up. They're going up just about on expectation. You know, I did a survey with Chip Case and Ann Thompson in June. People are expecting something like 4.5% price increase per year for the next 10 years. So far, we're right on track. I think our optimism that came when we rebounded from the bottom in 2012 is tempering a bit. It's not a dramatic change.
And I guess the fact that we saw 9% growth, at least in Miami and San Francisco and some other cities, accelerated growth, is that a good sign? Does that mean that things are bottoming and perhaps we can actually see higher growth when it comes to home price gains?
Yeah. But, the two best cities on the 12-month basis are Miami and San Francisco. And there's a pattern here, I think. It is glamour cities, beautiful places that have been the most bubbly in the past. I don't know exactly what accounts for these big price increases in those cities, but I suspect it has something to do with their history of speculative bias. And I don't think of it as a good sign. I think it's getting a little too bubbly in San Francisco.
Well, let me pick up the broader point here, Professor Shiller. I mean, my reading of this is actually very optimistic. You've got now 8 cities breaking out with higher growth rates. They're speeding up. I see that your colleague David Blitzer is suggesting that house prices could accelerate into next year. Could we deal with the glass half full side of the argument, which seems the strongest given where we've come from the recent surveys?
Yeah, actually, if you look at the seasonally adjusted data that we reported today, we're up, 0.7% in 1 month. So that's like a 10% or 0.8 in one of our series. That's about a 10% annual appreciation. So it's kind of a mixed picture here. You have to remember we're in a slow month. We're reporting on October, which is normally a slow month.
What happened to home sales in the month of November? Because we saw a dip for new home sales, a dip for existing home sales. Are these numbers going to recover in the new year?
Well, those numbers trouble me a bit. And I think that there's also the worry that the very low interest rates that we've had, with the 10-year just above 2%, that is also has been driving this market, and I think that's fragile. So I think of the market as looking on track with expectations, but fragile. I worry that this slow. One thing I've learned in forecasting home prices is that they're different from stock prices. If the rate of appreciation is very steady, and if it starts slowing down, that could be a sign of a turning point. I'm not calling a turning point yet, but I feel a little bit of anxiety about the market. I mentioned 10-year expectations being on target now, but public expectations of home prices are often very wrong. So there's a risk of it. It's always risky investing in the housing market. There is a risk of a turn down.
So finally, I'm sure you get this question all the time. In 2015, if you wanted to own stocks, which I know you've said are expensive for a while, or a house, which is the better investment?
Well, my CAPE measure, cyclically adjusted price-earnings ratio, is getting on up toward 28. It's kind of breaking out of the range that the stock market was in from 2004 to 2007.
Right.
So that's troubling. On the other hand, I don't think of housing as a very good investment unless you have a plan, unless you are a smart real estate manager. So I would still go with the stock market.
Still go with the stock market. All right, Bob Shiller, good to see you.